Hello everyone, hope we're all doing well. Paul here from the Pin Academy. So before you take any trade, you need to make sure that you prepare psychologically and also technically and fundamentally. So usually you also sentimentally. Personally, I use all the three types of analysis. I use technical, fundamental, and sentimental analysis. So fundamental, in case you may not need to use it if you don't know how to use it. So you just have to protect yourself. How do you protect yourself? Make sure you visit Fast Bull, check the economic calendar and know that on Monday, there's this news. On Tuesday, there is this news. Wednesday, there is this news, right? Thursday, Friday, check all the news that is there and check the time according to your country where you are, the location in which you are. That's fundamentally, right? Then you come to the charts and check if your analysis is supposed to allow you to trade that day, right? If supposed to make you trade that day, so you decide that am I trading after the news or before the news, right? So in this video, I'm going to be looking at how we can do a top-down analysis, what we call multi-time frame analysis. I'm going to be implementing exactly what we have been doing on this channel, right? I'm not just going to be teaching you things, pile topics after topics without implementing them and doing analysis with you guys. So I would have a couple of trades running. If you guys have been following the videos and analysis I've been doing, I think you've seen this setup a couple of times. So I took a trade on USDJPY. I expect it to go a long way. But of course, we don't know what the market will bring in the nearby future. Will the fundamentals change or not? So let's try to look at a couple of setups together, that the ones I'm looking at. USDJPY, I'm still very, very in it. Though I closed majority of my trades because it moved over 100 pips in my favor. So I just left tiny positions because I expect a retracement. Now, before I start looking at any pair that is related to the dollar or any pair, right? This is what I recommend. Make sure you check out the index of that currency and see its strength, right? So that's what we're going to first start with. I'm just going to come and we look at the DXY. Let's try to look at it. I've spoken about it in the previous videos. Now, you guys recall we wanted it to break above here, right? Which it did. Now, we say that we expect a retracement, and that retracement is coming. So that retracement may either stop here or it may come deeper. I spoke about that a couple of times in the previous video. So when the DXY is losing value, or it's retracing. In this case, it's retracing, but it's losing value. It's weakening. So when the DXY is weakening, what do we expect the dollar to do? We also expect the dollar to go down. When the DXY is going up, we also expect the USD to go up. So I'm just going to be showing exactly on those USD pairs. We're going to be looking at USDJPY, GBP, So just sit tight, watch how we implement these things. I'll be showing exactly the levels I'm looking at. So do not forward the video so that you can get a lot of value in the video, right? So now the DXY, we're expecting it to make a retracement. Why? Because you can clearly see this is an inverse head and shoulders. Let me just change the color to red so that we can see properly. You can clearly see this is an inverse head and shoulders here, whereby the neckline has been broken. So high probability we are coming down, meaning the dollar may first weaken before pushing higher to either retest here or even to break. We don't know if it will do that. So there are two possibilities. It's going to, after retracing, it's going to either come, make a lower high, or make double tops. And then the last possibility is it will break above, right? So make sure you're ready in all those scenarios. But what we're interested in immediately is the dollar is making a retracement, meaning it is weakening for the first time, for this time that we're in. Now, if the dollar is weakening for this time that we're in, what do we expect to do with our pairs? Now, let's start with USD, JPY. We're going to break it down together. I'm already in this trade, so let me just clear everything here because I already have my trade running on my account. As usual, when you're doing a top-down analysis or multi-time frame analysis, what do you do? You start from your directional time frame. And for my case, my directional time frame is monthly. Then you get your structure. Me, I get my structure from a weekly time frame. Then you check if the structure is aligning with the next lower time frame, which I normally use daily. Now, don't say that you should use these exact time frames. I've taught you exactly how to do that by teaching you the importances of time frames. I'm just going to attach the video top right corner on the description, and then you utilize it, right? You can use H4 for your direction, H1 for structure, and then you guys know the time frames that you can select. Yeah. So personally, I prefer monthly, and I recommend, if you're to ask me my opinion, I recommend that you use the bigger time frames for direction and structure, right? The advantages are just endless, right? The errors are very minimal and there's less noise, right? So when I start from the monthly time frame, of USDJPY, what do I observe? Now, when you look at this, let's first look at the bigger picture. When you look at the monthly time frame, what do you observe? Just looking at this, we observe that we have an inverse head and shoulders, and the neckline was broken and tested. So if neckline was broken and tested, what do we expect? We expect the market to be pushing higher. This one, I don't even need to be explaining a lot, right? So meaning that direction-wise, I'm supposed to be looking upwards. But remember, this is just the overall. Now let's look at the structure that the market is creating. So the month is almost ending. What we're interested in is the market to first break back above this level here. If it closes above here, the month, it will be very perfect for us. Let me just adjust it. So that is it. And then secondly, we have another high here. So I've already marked my levels that I'm interested in. Let's check the structure time frames now. Now let's come to the structure time frame, which is weekly. Personally, I use weekly. Now when I come to the weekly time frame here, what do we observe? We observe that the market created the W and it has not yet retested this area. So there's a possibility of the market coming back to retest before continuing. And why is that possibility there? Because currently we have hit a resistance in between here. I'm just going to mark it. We have hit a resistance, or we're approaching a resistance around where we are currently here, this neckline here, right? So when we have such a scenario, what do we expect? We expect the market to at least give us a retracement. Now, just remember that the market, the DXY is doing what? Let's just go back. The DXY is doing what? The DXY is, we're expecting it to retrace. You can also see the same structure. It has tapped into a resistance here. We're expecting it to give us a certain retracement, meaning the dollar is going to weaken a bit. So when you go back to USDJPY, does it agree with that? When USDJPY is going to make this retracement, what does it mean? The dollar is weakening, meaning we're on the right track. So here you have to determine or decide the type of trader you are. Are you a continuation trader or are you a reversal trader? If you're a continuation trader, wait for that retracement to happen before you can continue with it. If you're a reversal trader or you trade short-term distances, you can utilize on this, but this is for experienced traders. If your rules are not yet part of you or you're not comfortable in the market, please do not trade reversals or retracements. They are dangerous. I'm telling you out of experience, right? So that is my structure time frame. I've already identified my structure. If I want, I can also just mark this turning point here just because the market was rejected here, rejected there. So I can also just identify that. Then I'll come and check, does my daily time frame agree with that? So daily time frame, my daily time frame agrees with that. Why? Because in daily we're making high, low, high, low, high. So there's a possibility of us coming to retrace here. So also this is an impulse in the daily time frame. You can bring in your Fibonacci to get confluence, right? So there's no red candle that I observe here, so I cannot draw a Fibonacci. Let's check if there's any red candle here. There's no red candle. So when a red candle is printed out, we shall draw a Fibonacci. Remember the rules of Fibonacci. I'm going to attach the video so the top right corner. Make sure you observe it. Top right corner or descriptions, just check through. You'll see it there. Now, when do we bring in the Fibonacci? When the opposite candle comes in. But how about what's the first rule that we have to first consider before even the red candle being printed is there an aggressive push breaking several turning points? You can see all these turning points were broken to come and touch this one. So we expect the market to give us that retracement, right? So my structure time frames are all ready, right? I've gotten my direction. The DXY is speaking the same thing. My structure time frame is giving me the same communication. I've reached a neckline and I printed the W here and breaking this turning point, and I've reached a resistance. So I'm expecting a small pullback before any other movement next, right? Then when you come to the daily is agreeing with my structure time frame. I don't use daily for my structure because I look for very many pips and I'm a swinger, right? So if you're an intraday, daily should be where you get your structure from. Are we together? So for those who do intraday, daily is where you're getting structure from. And what's the structure in daily? It's also agreeing with the weekly, saying higher high, higher low, higher high, higher low, higher high. And when the market makes a higher high, what do we expect? We expect this pullback, right? So everything is aligning perfectly. DXY also agreeing with this. Now let's check what the entry time frame is saying. Now, if we're to observe the entry time frame, what is the entry time frame actually telling us here? The entry time frame is actually telling us that, hey, we do have a market that broke a couple of highs, broke this high here, retested it. But when we broke this high level here, we never retested it. So also the market broke this high here, we never retested it. We broke this high, never retested it. And currently we're a bit losing momentum. right? So those who trade using patterns, let's see if a pattern can develop here. Those who trade using levels and structure like me, we're waiting for the last higher low to be broken. So our work is just to identify which one is the last higher low. In this case, the last higher low was this one here, but keeping in mind that we have a threat here. So it may come tap here, react a bit, so that if it can give us a weak momentum, that's when we shall be interested in taking the trade up to this level or up to here. But remember, if you're experienced, that's when you can trade the reversal. Or if you're a short-term trader, intraday or scalper, this is what you should be looking at. So those who trade USDJPY, this is what I have. Remember, my time frames should not be yours. Personally, I use the same time frame that I'm showing you here. Remember, I'm sharing with you exactly what I'm going to trade, right? So that's for USDJPY. So the next one that we can look at is GBPJPY. Let's look at GBPJPY, and then we can also look at EURUSD, right? So let's look at GBPJPY. Where are you? Let me just look for GBPJPY. GBPJPY. It's here, right? So I'm also having a couple of trades on GBPJPY, right? Remember, I'm already in these trades, so that's why you're seeing this. So I can delete them because I already have running trades. So don't mind how that my chart is, because I keep usually my, I'm using my personal charts today, right? So let me just remove this. As usual, we're going to do the same procedure. This is how you do a multi-time frame analysis, or what we call a top-down analysis. Please make sure the steps are as follows. Have a directional time frame, which is giving you direction. Have a structure time frame and the next lower time frame that agrees with your structure time frame. The same process, please. Backtest it over and over. Make sure you're comfortable with it. Then also determine, are you a reversal trader or a continuation trader? What are my recommendations? If you're not comfortable with your rules or you're still new to the market, do not trade reversals, trade continuations. If you've been in the market for some time, you can trade all of them, right? Personally, I've been trading for some good number of years, but I don't still fancy reversals up unless it is maybe an MOW, right? So as usual, we start from the monthly time frame again. Let's first try to get our directional bias. Now, when I'm to look at my directional bias, what do we observe? We observe that, excuse me, what do we observe? We observe that this market here has been on an uptrend, and we expect it to at least hit a certain level. Now, which level am I expecting it to hit? At least to come and tap into this high level here. That's why you see I still expect it to go higher, right? Now, what we observe here, we observe that the market had just printed an impulse also in the monthly time frame. So, and the red candles came out. So when there's an impulse, what do we use? We bring out our Fibonacci retracement tool, and then we mark something like this, right? So the market didn't actually tap into our levels, but I'm just going to mark it here for future use. This will be one of the future targets. So meaning we have impulse, correction, and we push higher, right? So meaning the direction is still upwards until we tap into this, then maybe we can come and tap into this level that was not tested. So that's my directional bias on GBPJPY. Let's go down to the weekly time frame. Now, when you come to the weekly time frame, actually, this is the explanation as to why the market didn't tap into this monthly level. Why? Because also in weekly, we had an impulse. We had this impulse here. So if we draw your Fibonacci from where it started from until where the red candle came in, you can see we came and tapped into the Fib levels of the monthly of the weekly time frame. So in this case, since we're already into the trade or the market has already moved and we want to utilize the next opportunities, what are we going to do? We have the market that broke just this standing point here, right? And also currently we are above this standing point here. I'm just going to mark it for you here, right? Remember, structure timeframes are just for marking our levels that we want to utilize. Then we take entries in smaller time frames. So also I can observe that we have a W here, and then we have pushed higher. What do we expect? A small pullback, either into this level or this level here, before we can continue higher. Right together? So my structure time frame is telling me that I expect a pullback either into this level here or into this level before we can continue higher. Because also currently we have reached a minor level of resistance. I'm holding this trade, taking out most of my trades, left a few because I expect these reversals to happen before I can again take trades. That's how I normally swing, so that I don't swing or trade and hold on to my trades with a lot of emotions, right? So when I go down to the daily time frame, what do I observe? Daily, is it agreeing with my structure? Remember, my structure is weekly. Your next lower time frame should be agreeing with your structure. If your structure time frame is H4, H1 must be agreeing with H4. So let's map out and see, do they agree? So what is daily saying? Higher high, higher low, higher high, higher low, higher high. So when the market prints a higher high, what do we expect? A pullback. Are we together? So we're expecting a small pullback, either into this level here. There's a level here that we have here, or it can make it deeper here, or even deeper like we saw in there. It all depends on the pressure. Remember, I do not recommend reversal trading if you're not comfortable. Wait for the market to give the pullback. As it is coming back, observe the change of trend. If it changes from here, well and good, trade it. If it changes from here, well and good, trade it. Do not enter before change of trend. We have spoken about change of trend on the channel a couple of times. Are we together? So let me just clear this. Let's continue. So all our 3 time frames, direction, structure, and then that checks out the structure, are all communicating the same thing. We expect a pullback either here or even slightly lower here, which I see tapped into and it's reacting, but the best will be either here or even best for the better risk ratio. If it can come back here, there will be in a drawdown again, then we can utilize that. That's how trading works. It doesn't move in a straight line. So let's check H4. H4 still almost the structure like USDJPY. So H4 is still bullish, guys. You see what we have? We have a high, higher low, high, higher low, high. It broke this. Most people think it will have sold. No. The momentum showed the sell, but does not changed from the uptrend, right? So currently we're still an uptrend. You can see high, higher low, high, higher low, high. We've already taken out this low here. If it takes out this low, then you can be targeting this or this. So in this case, I expect it to first play around here. If it creates a pattern, those who trade using patterns, it's also very good because there's a resistance just slightly above here. Then you can utilize that, right? We've spoken about change of trend. Make sure so you utilize that knowledge. So those who trade GBP, JPY, this is what we have on it, right? You can see the chart is very clean. Do not have a lot of things to confuse you on your charts, right? Very clean and precise. So that's GBP JPY. Let's also look at Euro JPY. I'm giving you many examples so that you can utilize them. You see how we implement these same things. People may be saying, these things, you don't trade them or what. Now, this one hit my target, right? But I still expect further continuations, right? Now, I'm just going to, this was my target, this red line here. I'm just going to remove it so that we can do it again because this is the past now. As usual, start from the monthly time frame, right? Now, when you come to the monthly time frame, what do we observe? Now, this monthly time frame is very clean. Why am I saying clean? We have a high, higher low, high, higher low, high, higher low. So currently, we're closing above this area here, which is very nice because the month is still on. So we're above it. If you close above it, meaning that it confirms the continuation, right? But remember, I don't see anything next here, so I have to stretch a bit to my left-hand side to see, is there structure here? So when I'm to come here, what do I observe? I observe that the market moved from here up to down here. So there's a possibility the market may be wanting to come back into these high levels here still, right? So I'll just mark that. So if the market closes above this level here, my direction bias will still be upwards. Of course, you shall expect some pullbacks, but we need it to tap into this level unless the fundamentals of this pair change. Let's check the structure time frame. When you come to the structure time frame, very, very perfect, right? The same high that we have marked in monthly, the market is currently above it. And also we can add on a little bit of this level here also. So the market has printed out a W. After that market prints out a W, what do we expect? A pullback, right? So meaning we're also expecting some kind of pullback before we continue or before even we tap. We have a certain high here. So if it can stretch here and then make the pullback or it makes the pullback, our first target will be this one before this other one here. So you can see monthly, weekly, my structure is communicating the same thing. So my structure is already communicated and agreeing with the direction. Small pullback before we tap into this. But of course, we have this threat here. It can act two ways. It can first stretch to tap here, then pull back, or it can pull back before coming to tap here, react a bit, and then. So we have already established that, right? Now let's go down to the daily time frame. What do we observe? Let's check daily. Does daily agree with that? The same thing still, guys. Higher high, higher low, higher high, higher low. Higher high, higher low, higher high, higher low, higher high. So now this one is a bit tricky. Why? Because the market met a hidden structure here and reacted, but didn't tap inside here. So there's a problem. This market may want to first continue a little bit higher. There are two options here. So since we closed above this turning point here, right? We may just retest it, then we continue to tap that high that I've showed you, right, in weekly. Or if we break back below on a retest, then we can come back and test this high here or slightly below here before we can come and tap this level here and this one. It's agreeing with weekly. Remember, weekly has a certain resistance, just slightly up. So it can either retest just slightly here, then continue to that high before making a deeper correction, then we continue, or it may break below, retest, come here before going up there. So the structures are just the same. Let's check our entry time frame, how it's behaving. Now, entry time frame still very, very bullish, guys. Very bullish, just like GBP/JPY. What do we have? We have a high, higher low, high. This is a higher low. Didn't take out this previous higher low. So currently we are above here. That's why I'm saying that there's a possibility of just retesting. Then we continue, right? But if we come and break below here on a week retest, right, then we can be coming for this level here and also this level here, depending on how the momentum is. Do not just guess that there's a level here, it will come. I've marked this level from weekly or monthly. No, every turning point is structure, and structure can push price wherever it wants. Are we together? So this is it for EURUSD/JPY. Now let's look at more USD pairs, and we can look at the most traded currency pair, which is that is EURUSD. Now we're going to be doing the same things. EURUSD, I've spoken about it. That's why you see I have this and I'm waiting for it. I traded it. It hit my target. You can see it was a very clean one. Spoke about market phases. Push, second phase, then it pushed. So it tapped our trend line. I spoke about this trend line, but this is just the past. We're expecting it to come back here. So the same process, guys, the same process. You know, trading becomes boring if you have the same rules that you follow, but at least something that is boring, when it's paying me, I have no problem with it, right? Anything that is paying me, even if it bores me 1,000 times, I have no problem with it, right? So we have this level that the market came, tested. This is an improper retest, where I'll expect the market to come back here very soon. And why do I expect that? Because the market is failing to take out this high. It can take it out, right? It can take it out. I'm not saying it's not, but this is an improper retest. There's a higher chance we may actually come back here, right? Now, direction is clear. Now, let's come back here. We have a market that made a false breakout, then came and tapped into this, right? Now, we have a problem. When the market tapped that, we came and made a higher low, then we have broken down. You see, we broke this neckline here. There's a neckline, if you guys can observe structure. Are you seeing this? I have a structure here that the market broke and created a neckline. So there's a possibility I want it to go up. I think you guys can see why I'm expecting it to go back up now. So I'll just remove this. This one was tested. Then I'll come back to the daily time frame. Now, when I come back to the daily time frame, what do I observe? Let's check. The market that gave us this retest here, this is a high. Let me just show you here. This is a high, higher low, high. Out of all these highs, which one gave me a retest? It was this one, higher low. So high, higher low, high, higher low. Now the market came and tested these levels here. And when the market tested this one here, you see, false breakout, and then we tested it properly to push higher. Then we reacted here, but we never properly tested it when we broke lower. So there's a possibility we are coming back to test it, this level here. So this is the area that we are interested in the market coming back to, this area here, right? So I'm just going to mark it like that. So, and also we have a trend line. You know the rules of marking trend lines. You see the market made the high, higher low, high, higher low, high. So what am I interested in? I'm interested in marking the support levels that were giving us the trends. High, higher low, high, higher low. And you can see this was our third touch. It can push the market higher, but we're interested in so far seeing the market coming here. Then we shall observe if it will break or not. But for now, we're interested in it pushing there. And what do we observe? We observe clearly that the market has done what? Closed above this neckline here, right? So we shall see it clearly in the next lower time frame, which is H4. You can clearly see that we're above this area here. You can see the market was being rejected. So of course, we have a lot of resistances here, which are previous support. Excuse me. Which are previous support levels, now resistance, right? So if the market can give us some kind of weak momentum, let it first push, then give us a weak momentum, then we can expect to come into these levels. We have some strong levels here that the market may go back and retest. So those who trade Euro USD, this is how we're approaching it. This is the same approach I've been having. If you watch the previous breakdowns that we had, it has not changed. The same aspect, the same setup, clean chart. Just observe how clean the chart is. Am I saying that? Very clean. You can adjust the slabs if they're too big, adjust them. The more you go to the next lower time frame, you can adjust them, right? So those who trade Euro USD, this is what we have. Now, Euro USD going up, what does it mean? The dollar is weak. Let's confirm with the dollar index, right? Now, the dollar index, what do we expect? Remember, we said we expect it to make for us a small pullback, meaning it is weak. Euro USD going up, what does it mean? The dollar is weak. So we have a perfect correlation, right? But of course, you know, the market being the market, it can change. So always what is key is the momentum, weak momentum, and then we kick in, right? I hope it is making sense. It's a bit a long video, but I just want to show you many examples so that everything can make sense for you. So that's Euro USD. Let's add on AUD USD, right? Let's add on AUD USD. Where's AUD USD? So I've also spoken about AUD USD a couple of times when we're still trapped here. You can see the same setups that I share, the same setups I use if it is part of my watch list. Sometimes you guys request for what I don't trade, and I don't trade it. But this one, I didn't trade it last week, though it was a very good one. The market broke out of this level and had a very weak momentum here and then continued down. Our target was this one here, but we have gone a bit lower. So, excuse me, this is the past. Let's look at what? Let's look at it afresh. Top-down analysis again, or multi-time frame analysis. What do we observe here? Remember, we spoke about it when it was up here. We said that when it hit this resistance, we expected it to pull back down, right? So it has made that pull back down. Now, what next? We do expect the market to go and give us. Of course, we have some levels so that the market didn't test properly here, which may be our mid-term target, but we shall come to that. So when I go down the weekly time frame, okay, here resistance, false breakout, tested it properly. Again, we have come back to it. Now, what do we observe, guys? We do observe a market that is making highs, higher low, high, higher low. Now, it has not yet changed, right? It has not yet changed to become bearish, right? Because from here, the market can continue higher, right? And since we have hit one of the support levels, you see, let me just clear this. This is one of the support levels here. You can see that's why the market is reacting a bit. So we expect a small pullback, at least into these levels. So I'm just going to mark this area here. At least the market should come and retest these levels whether it rejected, right? So my structure time frame is clean. I expect a small pullback, maybe. Then we can come and test this area very nicely, right? That we marked in monthly. Remember, I marked this area here. Let me just adjust it. I marked this area here in the monthly time frame. This one. Just adjust it. So it's the same level that you're seeing here in weekly. It can come and be tested properly. Also, you can clearly see this neckline here was not tested when the market broke. So it's a perfect alignment. So when I go down to the daily time frame, what do I observe? Now, daily shows that this market shifted from being bullish to being bearish. Are we together? Observe here. The market was making high, low, high. These are equal lows, right? So the market here was testing this level that was not previously tested. You can see it's aligning with where the price is. But when the market made high, low, high, low, high. So when the market broke this last higher low here, actually broke two of them, then weak momentum, this was the range. Then we expect the market to continue lower. I'm still expecting the market to tap into this, right? Why? Because we have an impulse in daily here, right? Daily is agreeing with my weekly time frame. Weekly is saying that, hey, we need to tap here. We have an untested level here. So there's a possibility of us testing here. Are you getting it? So daily is saying that also we are on a downtrend and we have made a low, lower high, low, lower high, then impulsive. So when there's an impulse, you see there's an opposite candle. I'm going to bring from the highest point to the lowest point here. So I'm expecting it to come back and test at least these levels here of the fib. But most especially, you can see where the fib is aligning is this with this structure time frame here. If the market can push into this area, right, it may reach there, or it may not. Observe what is key is observe momentum and change of trend. If it is so aggressive, it is okay. On the retest, you can continue with it. But if the momentum is weak, which what we want for it to come and test here, should be a weak momentum, then we come back and retest, right? So let's check if H4 is agreeing with all this that we have done, right? So I'll go to H4. Now you can see H4, the momentum is very, very favoring us. You can see higher high, higher low, higher high. We want it to stretch. It's still bullish, right? If it can stretch higher high, higher low, if it can keep doing this until this area, then we observe a change of trend, right? Then we can fulfill this. But let's just monitor this. Are we together? There's not a change trend. If it is so aggressive and breaks above, it is okay. Also observe the weak momentum. Don't be falling for fake breakouts. It can also break above and then break back down, right? So those who trade AUD USD, that is it. So I shouldn't make the video so long, but I hope you guys have gotten how we deal with the multi-time frame analysis, guys, right? So do not forget to check the calendars for the days you're trading. Tomorrow is a Monday, nothing much usually on Mondays, but JPY there's something. I don't think most of us trade Chinese yuan and the rest, so there's something for there's a conference, but these are not so strong. There can be some impact, but not really. But Tuesday you can check there. We have some things coming through. Wednesday, right? And I recommend you using fast move. So that is it for this preparation. I wish you guys a profitable week.